Bitcoin, I think, is a newer asset. I think it's gonna be more volatile. For me, it's all about what's the price of the dollar, what's happening, and with Bitcoin, there's also a geopolitical hedge. 2 weeks ago, I'm still buying gold and Bitcoin every week because, the other side of that is, when do I want to buy dollars relative to gold and Bitcoin? Hey, it's Friday. Do I want to buy gold and, do I want to buy dollars and sell gold and Bitcoin? No, based on what I'm seeing, no, not yet. So I'd have to start seeing that. And I think the prices are way higher before that balance is in my own mind.
Bitcoin emerges as the portable digital safeguard in a world where traditional money is losing credibility. Luke Gromen's perspective highlights the importance of balancing gold and Bitcoin within a portfolio, recommending around 20% of liquid net worth be allocated to these assets. While he sees Bitcoin as having stronger long-term potential than gold, he cautions that its higher volatility makes it a more complex choice for the average investor. This blend, in his view, offers both stability and growth potential while recognizing different levels of risk tolerance depending on age and financial goals. He also emphasizes Bitcoin's unique qualities that extend beyond pure investment. Unlike gold, which is limited in portability, Bitcoin functions as both a monetary and geopolitical hedge. Its digital nature allows for secure, borderless movement of wealth, something that provides individuals with a form of financial mobility and optionality in times of political or economic upheaval. This ability to transmit and safeguard value globally, with speed and ease, distinguishes Bitcoin from gold as a modern hedge against instability. Despite his confidence in the United States and personal commitment to staying rooted there, he acknowledges the added layer of security Bitcoin offers. By continuing to purchase both gold and Bitcoin weekly, he positions himself for resilience against the declining dollar and rising financial pressures. He sees no justification yet for moving back into dollars, expecting that only at much higher price levels would such a shift make sense. For now, gold and Bitcoin remain complementary tools in navigating an era of monetary uncertainty. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the broader financial landscape. Thanks for watching.
The way things have evolved, the average person should probably have, in my opinion, 20% of their liquid net worth in some combination of gold and Bitcoin, depending on their risk tolerance, age, proximity to retirement, etc. Right? Because obviously, I think over time, all else equal, Bitcoin probably wins relative to gold. But there's ways that there's ways maybe it wouldn't. But let's set those aside. But then but Bitcoin in the meantime has been proven to be far more volatile. And that matters for the average investor. So, but yeah, I mean, the way things have evolved and the way things are evolving with AI, especially, right? Because we can just talk about the debt side and you're like, okay, we can see what they're doing. But AI is accelerating this. Like, that's the tricky part around, like, you can see, interest never sleeps, right? So compounding interest, it's the eighth wonder of the world. It's just going up and up and up. And that's, why they are having to shift more of the debt into, it's why, Besant came in and he doubled the run rate of treasury buybacks that Yellen was doing, and mostly shifting from long end to short end. Like, it is what it is. I would be doing the same thing. He's not a bad person for doing it. Math is a math.
And it's the stuff he said he didn't want to do.
Maybe, I don't know. He needs to get trillions into stablecoins. Where is he at today? 300 billion, 400 billion? It's not happening fast enough. He needs to be at 2 trillion by mid next year. And that has implications, right? Because that means he's got to issue the T-bills, and the stable coins got to get issued. And those are you got to start, and oh, by the way, if the banks, one of the provisions of the Genius Act is that the banks can use reserves to back stable coins. Well, the whole reason QE wasn't wildly inflationary, and I and lots of other people, this was pre-FFTT, I was just, sales guy on a desk. I thought it would be, but then as you read up and as time has gone on, it hasn't been as inflationary as feared, not by a wide shot, because essentially so much of it was sterilized in bank reserves. Banks were paid a bribe by the Fed to basically take the money they gave them in QE and just hold it. If stable coins start being used in day-to-day life, as banks are issuing them backed by reserves, you're mobilizing trillions in reserves. And now just ascribe a modest money multiplier to that. all the QE inflation that was, although that was feared and never arrived,
It's come in.
like a freight train, as our friend Lynn would say. So, and again, this was always in the cake. There is no, the math is the math. And that's why I say the events, you need to protect yourself. Like this, we all enjoyed the party, whether we voted for it or not, right? Boomers and silent generation are getting 70% of record tax receipts and entitlements. And yes, they did pay into that. They didn't pay that much for it all. Mm-hmm. There's been inflation of services, et cetera. They're taking out more than they put in. That's why the deficits are what they are. And oh, by the way, our politicians spent their money as they put it in. They're spending our money as they put it in. So yeah, I mean, it's somewhat cliche. You need to own gold and Bitcoin, but you need to own gold and Bitcoin. We're in that part of the cycle. It just is what it is. And I hope, after it's over, then, I can leave a note in my will for my grandkids or great grandkids and say, listen, there's going to come a time around, 2085 and you're going to want to start buying some gold again. And I'll be done with it for the rest of my life. And, it's the arc. That's all it is. Gold and Bitcoin is just the arc to get you through this monetary storm, this monetary flood. Bitcoin, I think, is a newer asset. I think it's gonna be more volatile. For me, it's all about what's the price of the dollar, what's happening, and with Bitcoin, there's also a geopolitical hedge, mm-hmm. right? And I never thought, look, I'm not going anywhere. I'm staying here. I love this country. I was born and raised here. I'm an Eagle Scout. I'm not leaving, right? For the meme. I'm not leaving. I'm not fucking leaving. But it does give you some optionality for periods of time, right? In a way that gold doesn't, simply because, it's hard to fly somewhere with any real amount of gold. It's really easy to fly anywhere with enormous amounts of Bitcoin, or it's really easy to send, Bitcoin over a Zoom call to friends, family, et cetera, around the country in a way that is just impossible with gold. So for me, it's all about what's the valuation of the dollar sort of relative to these assets? And what am I watching? What am I seeing? Are things getting better? Are things getting worse? What's the political, and unfortunately, sort of across the board, a lot of the metrics, I think I wrote it a couple weeks ago, 2 weeks ago, I'm still buying gold and Bitcoin every week because, the other side of that is, when do I want to buy dollars relative to gold and Bitcoin? Hey, it's Friday. Do I want to buy gold and, do I want to buy dollars and sell gold and Bitcoin? No, based on what I'm seeing, no, not yet. So I'd have to start seeing that. And I think the prices are way higher before that balance is in my own mind.
Luke Gromen argued that the deep structural flaws in the U.S. financial system make holding gold and Bitcoin less of a speculation and more of a necessity. With entitlement spending far outpacing contributions and future revenues already spent by policymakers, the math ensures that the system is on an unsustainable path. In this environment, he views gold as the historical anchor while positioning Bitcoin as the more critical asset for navigating today's phase of debt and monetary instability, an arc to preserve wealth as pressures intensify. Luke Gromen also highlighted how recent attempts to restrain markets, such as those in early 2024, revealed just how fragile the balance has become. With debt loads rising and deficits entrenched, policymakers are forced into a narrowing corridor where inflation must remain high enough to prevent a debt spiral but low enough to avoid a bond market revolt. As this margin continues to shrink, the eventual outcome points to money printing as the only viable option, reinforcing his belief that accumulating Bitcoin is essential for protecting against the inevitable erosion of dollar stability. Let's get back to the interview.
I think there's still a risk of it for some period of time, simply because of the level of debt in the system. All the great inflations that you see are not because, oops, the central bank was too loose and the economy ran too hot and inflation suddenly went to 40 or 50. That's not how it works. Mm-hmm. It's the great inflations are, we have debt to GDP of 120%, and our foreign creditors are not buying our debt like they were, either at all or certainly relative to the new deficits. And our deficits are 6 to 7% of GDP. And then we have some sort of crisis. And when we have the crisis, receipts fall, interest doesn't fall. Foreigners sell bonds to get liquid, and the rates start going up in your crisis, and you go into a debt spiral because of the level of your debt, level of your secular deficits. And then the central bank and the government faces a choice, which is simply, do we stand aside and default on our obligations, or do we print money to keep our debt nominally money good? And it's those times when governments are printing money to keep their debt nominally money good that we've seen the greatest inflations in history. And of course, the numbers I just laid out were the numbers of the United States. Mm-hmm. And so, yeah, is it possible? Sure. Is it my base case? No. But it would depend on events. It would, if we get a crisis, we get a recession where receipts start to fall, GDP starts to fall. GDP falling with debt to GDP and deficits where they are, structural deficits, it's not a policy option. You start to see, and importantly, we've seen hints of this. We even saw it earlier this year, where if you remember part of the plan, right, we're going to do austerity, and we're going to Doge, and we're going to take some pain. Mm-hmm. And Besant's going to scare stocks into bonds, and he's going to get the 10-year down. Judge us by the 10-year. Judge us by the 10-year. I think this was February he said this. And then we start moving toward, we weren't even into Liberation Day yet. We were just into March. And stocks are going down, 10-year yield's going down. So far, so good. And like 10 days in, all of a sudden, stocks keep going down. 10-year yield starts going up and keeps going up, keeps going up. And then we do Liberation Day, and it like comes down for a cup of coffee and then takes off like a scalded cat higher. This is emerging market with a fiscal crisis, having a recession, trading action. And had they stood aside, had Trump not tacoed, right? Trump always chickens out. They didn't have a choice. I think he said the bond market was getting a little queasy. Yeah, it was getting a little queasy. it was getting a lot more queasy. They were getting themselves into a position where, okay, your interest rates are going up, your receipts are going down. You've got a couple of weeks until you have a really bad or failed auction, and then it's only going to get worse. And so their choice is sort of taco and get what we've in taco in April and get what we've had as we sit here. Today's October 8th. Get what we've had in the ensuing 6 months, which is sort of bubble time, and inflation has stopped going down, and maybe it's ticking up a bit, and gold's at 40, almost 4,100 as we sit here, and Bitcoin's 120,000, 125,000, and stocks are at all-time highs. Like that's the choice, that's the trade-off to making the decision in April not to send the United States, and by extension of us being the world's reserve currency and base reserve asset, incumbent base reserve asset, into a debt spiral, which would have been rates up, stocks down, bonds down, just wash, rinse, repeat until you either default or you print it all. Mm-hmm. And so it is still a possibility. And it's one of these things where the margin of error keeps getting slimmer over time. As the debt goes up, in theory, there's this operating room where, okay, we're keeping inflation high enough that we're above stall speed where we go into a debt spiral. But we still are low enough where the bond market's not freaking out on the other side, right? But the rate that you need to stay above stall speed goes up with your debt. And the rate, whether it's a hard ceiling or it's a declining line of the rate where the bond market starts to go, we're done here.
Bitcoin stands out as both a hedge and a lifeline in the current financial era, offering resilience against debt-driven inflation, portability that gold cannot match, and optionality in a world where crises can quickly reshape the monetary landscape. Its volatility remains a consideration, but that very volatility is paired with asymmetric upside in an environment where governments are increasingly forced to choose between default or money printing. As deficits expand, debt levels climb, and the margin for policy error shrinks, Bitcoin functions as part of the necessary arc to carry wealth through the storm, serving not just as an investment but as a geopolitical hedge and a safeguard for the future. How might Bitcoin's role as both a monetary and geopolitical hedge evolve if the U.S. enters a full debt spiral and foreign creditors significantly reduce their support for treasury markets? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.